Hello, everyone. Happy Friday, and welcome to another weekly recap with the Defiant print team. I'm YYC Trader, head of news, and I'm joined today by Owen for now and Jeremy Nation, our reporters. And yep, quite a news-filled week, despite the markets not really going anywhere in terms of Bitcoin and ETH. We're pretty much um, we're pretty much today where we started the week at around 1850 on ETH and 29K on Bitcoin. But we did have a lot of, I'd say, important news for the crypto space. We had PayPal, the payments giant, launching its own stablecoin on Ethereum. Um, in some good news for DeFi, we had the Curve exploiter returning. I think it's up to 70% of the funds have now been returned to the affected protocols, and they're figuring out how to uh, get those assets back to their original owners. We had the Fed jumping in with a new program to targeted at supervising crypto activities undertaken by U.S. banks. I think this is basically an acknowledgement that crypto and the traditional finance system are now increasingly getting intertwined. So they're kind of taking a proactive approach to, figure out what's going on before we have a repeat of March with, banks coming under stress and, everyone trying to figure out what to do at the last moment, right? So I guess it is in a way a good thing that they are taking this step, but of course, the nuance and the details matter, right? As always. So anyway, we'll get into those stories and more in the recap. And this show is brought to you by Bumper, which lets you defend your crypto from market crashes and downside volatility. More from them later. So let's dive straight in. Owen, do you want to start with the PayPal announcement?
Yeah, let's do it. Hey, everyone. Happy Friday. So, as we know, PayPal launched a stablecoin on August 7th that sent PayPal shares up 2% on the day. It didn't really boost Ethereum, maybe surprisingly, despite PayPal choosing the Ethereum blockchain to do the launch. So, yeah, people are kind of grappling with it, trying to understand PayPal's angle. And I mean, the obvious thing is that reports coming out of Tether and Circle have shown that both of those stablecoins, which are backed by US Treasuries, have been hugely profitable. I think Tether hit something like 850 million in Q2 and over a billion in Q1. I think Circles came out this week too, also in the high hundreds of millions. So PayPal is also launching a stablecoin backed by U.S. Treasuries, which, as most people who have been following the market know, are at I think 22-year highs in terms of interest rates. So that's the high level. I don't know if you guys took anything else surprising away from it. I mean, the launch on Ethereum was noteworthy. Um, yeah, I mean, obviously that stablecoins are big businesses. I mean, I wonder how many we need. But yeah, I don't know. I mean, and it's a financial giant getting into the crypto space, which during a bull market would have sent everyone you know screaming and popping champagne. So that's where we're at. We'll see where it goes. We'll see if it matters or not. But yeah, that's where we're at.
Definitely interesting to see how the market is reacting to this in the bear market versus how the bull market sentiment may have been.
Yeah,
Yeah,
because
in
there've
the
been
bull
like
market,
decent news. Go ahead, Warsi.
yeah, I said in the bull market, any news is good news, right?
Mm-hmm.
So
Mm-hmm.
yeah, not surprising to see a muted response, given that we're in the summer.
Yeah,
There's a lull in trading plus bear market.
yeah.
Um,
PayPal stock was up though. I was surprised to see that contrasted with. Just seems like I don't know quite why Ethereum and Bitcoin are trading in such that narrow band, but yeah, they haven't moved.
Everyone's flipping friend shares on base, right? No one's
I
interested in Bitcoin and ETH anymore.
yeah,
We'll talk about that as well. The hot new meta, if you want
right,
to call it that.
right.
But yeah, it remains to be seen how effective PayPal will be at onboarding new users to
Yeah.
crypto.
Yeah.
It's a great it's great news for people already in crypto because it gives you another option in terms of off ramping and stuff. I'm assuming, right? Once
Yeah.
it comes live, especially for people in the US who are restricted from most exchanges. So
Yeah.
I guess this is it is good news in that sense.
That's true. I hadn't thought about that.
Moving on. So Alchemix, I believe, was it the only protocol that got everything back? Because I believe the hackers returned all the ETH and ALETH. Right?
Yeah, Alchemix is at 100%. I am not up to date as of this morning. There may have been more returned. It looks like the block is reporting that 70% of the assets have been returned. So I'm not sure about the exact numbers up to the moment. The story's from
Yeah, I think basically the person who exploited the CRV ETH pool is the only one who hasn't didn't respond to the bounty or didn't return anything. So now they've offered the bounty to the public as they said they would, right? To
right.
find that person essentially. So I think
And
that's what
yeah,
remains outstanding. Everyone else is kind of
that's
either
interesting.
taken 10% and returned it, or like it's been white hats, and of course Alchemix.
Yeah. That's interesting. So do we know? I mean, how many hackers drained the pools? I mean, there was the MEV hacker, Coffee Babe. They returned. I guess I wonder, and if you guys don't know, all good, but who's the holdout? I suppose are they the ones who also attacked Viper, or are they someone else?
It's
We'll have to-
impossible to say.
Yeah.
Yeah, honestly, not sure.
Yeah. Yeah.
But just I think it's great for users that most of the assets came back. The 10% hit is something that Curve can easily absorb, right? So it's
Right. Yeah.
good news
It'll
for
be
the ecosystem.
Yeah, and like while I see you've said in the past, once projects get hacked, it is hard for them to come back. So it'll be interesting to see how they do from I don't know, I guess public trust perspective after this has happened.
I mean, in this case, it wasn't the Curve contracts, right, at
True.
risk. So I don't think it's a reputational hit as most exploits would be.
Yeah,
Most people still think Michael's like king dev,
yeah,
and obviously, he's been taking action to kind of shore up his outstanding loans across DeFi, right? So that's I think added confidence. Plus, we had Binance also buying 5 million worth of CRV, right? We'll be
Right.
publishing that story probably
Right.
very soon after this call, but. Yeah, I mean, it's been a crazy week in terms of OTC trades and, just Curve kind of getting back on track, I guess.
Yeah. I mean, I just hope you wonder whether the public can. I mean, even when writing, I found myself calling it the Curve hack, and having to correct myself. So just hopefully that distinction makes it out into the public that it's actually about Viper, not Curve.
Yeah, there's a lot of association, I think, that just comes along the lines there. And it goes to show you, when something like this goes down, it's not just the capital you lose, it's that reputational. And,
Yeah. And people are definitely more aware. Sorry.
No,
just like, people are definitely more aware. I mean, I know I am of Michael's intense. I mean, I had written about them, but it just made them so much more real when he was making all these OTC deals that, just that he has still tens of millions in borrowed funds are all borrowed against Curve. So anyways, it brought a lot of things to light, I think.
I think this exploit for me, it raised a couple of questions. One, is this the new normal, which is where you you exploit something, keep 10% and give it back? We saw it with the Euler exploit as well, right?
Yeah.
Same thing. I mean, most of the big hacks that have happened, the high profile ones, seem to be getting resolved in this way, which is good in the sense that, okay, it's like a 90% or 10% loss is much better than 100% loss.
Yeah.
But does it also incentivize people to say, okay, this is like an easy way to make a few million.
Yeah.
Right.
Yeah.
Because and secondly, what does this mean from a law enforcement perspective? Just because you returned 90% and the DAO agreed not to prosecute,
Yeah.
does that mean the SEC or DOJ
Yeah.
or whoever will say, all right, the DAO agreed, so we can skip this? Or will it be like the Mango Markets thing where Avi made a deal with the DAO, right?
Yeah. Yeah. Yeah.
And they still went after him. So,
oh, did they? Yeah. But the DAO didn't pursue legal action. The SEC pursued it separately. No.
Yeah.
Yeah, but still, yeah, it's like people are like, okay, who cares that or the SEC can be like, who cares you made a deal with this decentralized organization? Like,
I think it comes down to the semblance of like, you're basically ransoming this protocol. Like you're going to them say, look, I found an error in your code and you can give me money and I'll show it to you, or I'll exploit your code and then you can give me a bounty. And I don't think the SEC likes that type of activity regardless. I think it goes a little bit further than the typical security auditing that exists in, marketplaces.
Yeah. So
I think, I think while we're on this topic, probably a good time to dive into the response to the hack, right? Because this is one
Absolutely.
of the measures that came in. Jeremy, do you want to take us through this?
Indeed. So what we saw in response to, this hack and just the general state of crypto, in July alone, I think we saw over 300 million in hacks. From CertiK, and that stat came up, by the way. So a lot of the individuals in the industry have formed together to create a means by which individuals who have been exploited may disclose that information without necessarily exposing themselves to malicious actors. And this is called Seal 911. It's a Telegram bot. And when you send a message to it, this bot alerts a team of experts from across several different teams that are well positioned in the space in terms of having, experience to handle these types of situations. And while a lot of times you may not be able to recover funds, turning to individuals who can actually help versus a myriad of scammers that come across with false hopes of trying to get your stuff back and then sending you a bunch of scamming links and, really complicating the issue. It's a much better approach. You may notice that MetaMask has a similar support function, but this is yet another means by which individuals can turn to a secure way to try and get help in the cryptocurrency industry, which we see very few of these options exist in this ecosystem. While on the other hand, there are a great deal of individuals that are malicious actors just waiting in the wings to separate people from their cryptocurrency by providing false links, stealing private keys, or otherwise exploiting infrastructures that have code that is not ready to be out there in the school of hard knocks that cryptocurrency presents. So Seal 911, something that you can turn to. If you have an emergency, you can go and click that I have an emergency button, and it will ping one of the individuals on the team who will hopefully be able to help you in some sense and get some idea of what's going on. Again, once funds are stolen, there is a very slim chance of recovery. However, having the right people to respond to it is a key difference, and it can make all the difference. And having a rapid response where you can alert industry professionals and perhaps even get white hat support from, to thwart these hackers, that's a big deal. And so this is a potential means by which that can be achieved without alerting the wider pantheon of individuals that have nothing interested, like they have no interest in the benefits of any protocol or individual. They're out there only to help themselves.
Oh, absolutely. I think this makes a lot of sense because even in this case, right, when the first exploiter happened, I believe it was Metronome DAO, it was like 1.6 million or something. Yeah. Right. So if, for example, this bot existed and that team said, I have an emergency and alerted everyone, it's possible. I mean, we don't know, but it's possible that the white hats could have alerted those other teams and potentially, I don't know, frozen the pools or paused them, because this is DeFi, but as we know, teams still retain quite a lot of control over like smart contracts, right? I believe curves are immutable, so those couldn't have been paused. But in other cases, right, which
Yeah.
most DeFi lending and other protocols have pause functions, for exactly this reason.
Yeah.
So it could, hopefully help in future cases, which we're sure to see, unfortunately. So
just another more robust layer of back channel communication to, bulwark against these types of exploits is exactly what the industry needs. So it's great to see people working together to try and build these protocols to keep us safe.
Yep.
And it's
absolutely.
sorry, just one question. It's not like for like, is it for individuals? Like, oh my God, I lost my 6th board ape, or is it like, or it's like this protocol is in danger? Like, because I feel like a helpline might get overwhelmed if it's, I already worry that it might get overwhelmed.
I know it says like in emergencies only use this button, right? And like you have to kind of gauge what is an emergency. To one person, an emergency might be different to another.
Yeah.
I would say this was built more protocol minded, given the extent of the event that was the catalyst. It's built for people behind protocols to turn to someone that can help defend those protocols.
Yeah, I would imagine that's the case. It's not like helping some guy get his private key back or something. So
most likely no.
Yeah, right on. Cool. Just clarifying.
Yep. So all right. So let's jump back to some of the regulation news that we had this week with the Fed, as I mentioned at the start of the stream, jumping in to take a more active role in regulating crypto activities in the US.
Right. So this came out on August 8th, and it's still not entirely clear to me how it's going to manifest, but the Fed did announce plans to supervise novel activities in the banks it oversees, and these activities include technology-driven partnerships with non-banks to provide banking services, providing custody, trading, or collateralized lending services for crypto assets, and tokenized securities, and so forth. So, yes, basically, it seems like on a high level, the Fed is looking to is acknowledging that there are all these novel activities that banks are looking at and potentially participating in, or are partnering with technology firms, which are enabling a lot of crypto adjacent activities. And so now they are like officially creating a unit for that. And there was also another, they also submitted a document saying that they were like clarifying it was very hard to catch up quickly because there's a lot of jargon, but they're also they're basically making banks, I believe state banks, clear any stablecoin issuance with the Fed, which I didn't quite realize was under the Fed's purview. So yeah, the super high level is that the Fed is looking to more actively supervise crypto activities in banks and bank partners. And we're going to have to see what that means. A lot of people were wrestling with whether this is bearish or bullish. And I think we haven't quite been able to figure out what is the case. I don't know if you guys have intuition here. I would assume it's a little...
The industry's reporting on itself, right? So I would assume that they're trying to make sure they have all the information about what their activities are in that sector. And they may be preparing to do that to avoid regulatory scrutiny, or to show that they have a paper trail of documentation regarding their, what type of partnerships they've been building pursuant to any future regulatory moves that are being made. But it's very difficult to say. And that's probably why we have no clear kind of movements from the market in terms of this type of news coming out, right? We have all known that the banking sector is interested in, stable coins and in cryptocurrency in general, but there's been no major push from that industry yet into crypto, which has probably been forestalling a great deal of growth, perhaps extending bear market conditions. However, this doesn't seem to me to be any great indicator of it. It seems to be more kind of like the bank reporting again on itself and trying to figure out, who's going to be managing this. You mentioned that they're reporting to the Fed. Is there a precedent for the Fed to be taking the reins in terms of like central bank digital currencies or stablecoin development in terms of, banks?
Yeah,
I mean, when it comes to these agencies and they can say whatever they want, right, in
Yeah.
policy statements, until someone pushes back, either another agency, Congress, or someone who they answer to. That's the status quo, right? What has the SEC been doing? They've made no rules for crypto, but they just enforce and call whichever tokens they like securities, or it's but there's no checks and balances in terms of like what they say, right? So I think we can take this with a mountain of salt and see what actually comes out of it. I haven't read the text myself, but it seems like they're trying to make it more difficult for banks to issue stablecoins. So they basically make it so cumbersome where the bank says, you know what, it's not worth the hassle. Let's just avoid this entirely. Right? Especially the big banks. Like, why would JPM or any of the Bank of America or whoever want to get into this business, which would be what, 0.05% of their overall business, and then have to deal with the Fed poking the nose into probably everything else that they don't want them to see, right? So
I think that's right. I mean, Nick Carter, the investor, said essentially that he didn't think banks were going to go near stablecoins until there's some kind of legislation allowing them to issue them. So interesting. Interesting times. And interesting with Facebook or PayPal
absolutely.
too.
And speaking of stablecoins, you were looking into Aave's recently launched stablecoin, right? And why it's been consistently trading under its peg.
I can get into that. Let me just pull that up. So we did notice that Aave's Go stablecoin, which launched nearly a month ago, July 15th, has been trending down since launch. I think I saw it kissing like 97.1 cents. So it's trending lower. Looking at whether that's a big deal and whether people are concerned about it, we reached out to Stani, who founded Aave back in the day. I think that was like 2017. And he basically said that they weren't super concerned. Go is very young. The DAO chose a very low interest rate, and so they're more. They're going to announce a module which should stabilize it. So I guess for background, right now you can borrow Go at 1.51% against your assets on Aave, which is super low relative to what you can get elsewhere on Aave and DeFi, especially considering the curve hack, which has sent USDC loan rates above 10% a lot of places. So the suspicion is that there's an obvious arbitrage to borrow Go at that low interest rate, deposit it, and earn a higher one, capture that spread. So that may be happening because supply of Go has been growing correspondingly with the peg dropping. So we'll see where that goes. And just the last thing is that Aave is voting on a peg stability module, which allows one-to-one redemptions with other whitelisted assets. I mean, assuming stablecoins, and that was instrumental in stabilizing DAI, the MakerDAO stablecoin. So they also anticipate that will have a huge impact here, and that is not a controversial vote on Aave's forums. They're pretty much 100% behind it. So that's where that stands, and so it'll be interesting to see how Go goes, and we'll go from there. Nice.
I think that makes sense. Your theory about people selling Go for other coins, because I mean the arbitrage is pretty attractive, right? You can, especially right now with the rates elevated on Aave, in the wake of both the exploit and I think general risk-off sentiment. We saw quite a few quite a lot of stable coins being pulled off Curve and Aave, right, in the last week.
Yeah.
I think the rates are hovering around 10% now for
Yeah.
USDC and Tether. So yeah, makes a lot of sense to just borrow, sell it for one of those, and then deposit it, right? It's interesting to see that CRV USD has been rock solid despite the exploit, despite everything.
Yeah.
CRV contagion fears and everything. It's those peg keepers and whatever those guys have cooked up seems to be working, right?
Yeah. Yeah, it is interesting, and I did notice. I think it didn't make it into the article, but further evidence for the arbitrage theory. I think people are borrowing CRV USD it was at least 3%. I mean, it varies based on the collateral, but I think everything was at least 3. So just again contributes to maybe Go as a more attractive option to arbitrage against other rates.
Yeah,
So,
and like Stani said, it's still early days, just 20 million. That's like the stablecoin
it's all
still a
good.
baby. You know, it's not even reached like toddler stage yet.
Yeah.
So,
It's just because the Aave brand is pretty strong, so you have to scrutinize them a little bit.
Yeah. And I guess, they're bootstrapping adoption. Instead of throwing incentives in terms of tokens, they've just offered a low interest rate. So it's like one and the same thing, right? So makes sense as a bootstrapping mechanism. So I love that we have so many options now in the stablecoin space. As a degen, I love it because there are pairs of each stablecoin with the other. So you have so many ways to earn excess yield, which is amazing.
Just like on curve pools, you feel like?
All over the place, because you have like other dexes which are building, which like, I forget the name now, but there are other projects where you can deploy Curve LP tokens to earn like additional yield, right? And now you have so many different pools because all these stable coins are paired with each other. So you have like the one in the article, right? You have Go CRV USD pool. Then you have CRV USD paired with like USDC, Tether, and the other ones. Then you have a Go pool. Then there's a new one called R, which is another stable coin. And then there are so many liquidity forks that have popped up, like Gravita is one that I'm using currently because they don't have a token. Plus, you get to borrow for free, essentially, if you have the loan open for more than 6 months. So seems like a good deal. And you can essentially use LSTs as collateral. So this is all linked, I'd say, to the LST-Fi boom, right? So everyone's kind of slicing and dicing that 5% ETH yield into, you name it. If you want, like on Pendle, for example, you can buy the just the yield token maturing in 2024, 25, all the way out, right? So that lets you speculate simply on whether the yield will go up or down, right? Because that token would move correspondingly. So, yes, I saw some threads over the week saying, there's no DeFi innovation happening and like there's no new stuff really coming in, but which is true to some extent. Yes, we still have, the major primitives haven't really changed. We have like the DEXs, which is Uniswap, some synthetics, which synthetics basically pioneered, right? And a few other major protocols which let you do the basic financial transactions that you need in crypto, like borrowing against it, stable coins, stuff like that. But beyond that, nothing that came out of like post DeFi summer really stuck around, right? So I guess it's we'll have to see if LSTFi is another flash in the pan kind of narrative, or it has kind of staying power in that sense.
I think it's got legs. I mean, I don't know. I think it's got legs. I mean, that yield is not, it's not coming from token incentives built on top, right? It's coming at the core protocol level. So
I mean, part of it is, right? We still have slight inflation in terms of block rewards for validators.
True. But I guess it's just that it's ETH, it's Ethereum. It's not like some random coin that someone just like spun
ultrasound money.
It's native to the whole thing. It's not like whatever. Someone just like
it's the settlement layer of the internet.
Yeah. And we're seeing this happen now, right? I think it was a DC investor who put out a tweet a couple of days ago. So the top gas consumers on Ethereum are now all essentially, apart from Uniswap and like the hot project of the day which comes in, but it's all these layer 2 sequencers.
Yeah.
Right.
Yeah.
So what I forget who it was who tweeted, but he said that in the future, if like the layer 2 thesis plays out, ETH will be basically like the fuel that corporations stock up, in terms of for the future, right? So that they can keep settling their L2 transactions. So
yeah.
Yep.
Yeah, definitely.
But we hope, since we're still here, that we're early. So let's hope it plays out, right? All right. Anyway, before we move on to the more stories, let's have a quick word from our sponsor, Bumper.
So here's something new. Bumper your assets to defend them from price drops without losing upside exposure. You set a price floor and term length, then lock your tokens into the protocol. When your term ends, if the price has fallen under your floor, you leave with stablecoins at the floor's value. Otherwise, you just take back your original asset. Bumper is going live in August, and it's one of the most innovative DeFi protocols for hedging being built right now. So check out bumper.fi, there's links in the description of this video. Now back to our story.
All right. Bumper has been around for so long. I remember participating with Robin in the IDO they did back in 2021.
Oh.
Yeah. Still got those tokens.
Yeah. We'll see how it
goes. Not doing too well, but I mean, it's great to see that the project's building and doing something. So we hope for a recovery.
Yeah.
Let's see. All right. So moving on, we had this week was dominated in the DeFi space by Base, the new layer 2 from Coinbase, which completed its general access launch, is what they're calling it, which is basically opening it up to the public. Officially, because it was kind of open to the public if you knew what you were doing for the last couple of weeks, right? It was open to developers, who in turn launched a bunch of meme coins, Bald, which was one of them, and kind of, I think, left a bad taste in many people's mouths who were using Base for the first time. But all that is done with, and it's now open to the public. And they've taken an interesting approach in terms of being very clear that there's no airdrop planned, at least for now. But they're trying to incentivize people to use the chain by partnering up with a bunch of projects, companies, NFT artists, etc., to do this whole Onchain Summer campaign. Owen, I know you were skeptical of the name when they first floated it, right? Have you changed your mind on that? Or
I mean, I just like, I don't know. Everyone busts out these summer. I don't know. Everyone wants to call something summer, but man, it's August. Like, I don't know. I think everyone loves to call things summer, but no, it's great. It's very mimetic. Base's TPS is ahead of Arbitrum and Optimism already. I was looking at L2 Beat, so they're number 2, just behind ZK Sync and Ethereum itself. So we'll see how long that lasts, but they're doing something right on launch week, it seems like.
Yeah, absolutely. So so completely different approaches being taken by a Base versus something like, say, Consensus is Linear or ZK Sync Era, which are both competing layer 2s, but they've made no secret that a token's coming, which is why degens are farming it pretty aggressively, right? And you see
ZK Sync, but Linear, no, right? I feel like Linear hasn't teased one, have they?
Not officially, but of all the layer 2, personally, I think Linear has the best chances for a lucrative airdrop, because it isn't being farmed to death like ZK Sync is, for example.
Yeah.
And it is consensus backed, right? 750 mil raised, and
Oh,
How
that's
else do you
alpha.
monetize your investment
Yeah.
if the chain takes off?
Yeah. We'll see. Anyways.
Yeah, Coinbase, of course, has regulation concerns, and they don't need to give Gary more ammunition to come after them, right? Saying that, oh, you dropped a security now. But yeah, again, will it be possible for them to maintain organic usage post on-chain summer without a token? I think that's the question that everyone's kind of looking to answer, waiting and seeing, basically.
Yeah.
So
it's doing better than their than they had an NFT marketplace, right? That didn't go very well.
oh yeah, I think it did. Embarrassingly low volume.
Yeah, it was really bad for a second. It was like $1,000 a day or something.
Yeah, I think it did, like, in its lifetime, the volume that it did was less than OpenSea was doing in like a few hours at the time. So
yeah,
something crazy. But in terms of the layer 2, especially building on the OP stack and trying to be part of the super chain, its vision for the future and stuff, yeah, I think they have a good chance, especially given that US based, and Ethereum, whether we like it or not, is still kind of US centric, right, in terms of nodes, the community, everything. So yeah, I think it was Jeebus who tweeted this morning saying that he's thinking Base could be like BNB chain, but without the Binance baggage.
Yeah.
Right.
Indeed.
So that's how it started back in 2021, right? It was meme coins, then DeFi, basically forks of stuff on ETH, right? PancakeSwap started that and then moved on. Yeah. But at least now we have Uniswap itself is live on Base. So I think PancakeSwap as well might be launching, might be live already. But
yeah, they've been expanding.
Yep. And if you guys haven't seen it already, we did a great video on getting started on Base. So how to bridge, a step-by-step guide done by our video team. So make sure you check that out if you're looking to get started with Base. And most of the NFTs that they are offering over the course of the campaign are time limited. So if you are planning to participate, I'd say, get started now, because it's really cheap to mint most of them, like cents and gas. So if they do end up doing an airdrop down the line, these things might play a role. Like early users usually get rewarded the most, right? And is what we've seen from past airdrops. So
let's see what's going
Start
on.
generating those on-chain records, everyone.
Yep. All right. This was something that I've never seen before. A mystery wallet, ND4.ETH, has burned more than $8 million worth of ETH tokens, NFTs over the last couple of weeks. And there's been no explanation. No one's been able to get in touch with him. And people are just speculating as to why someone would do this. Just yesterday, the wallet burnt a bunch of GNS and GMX, which are tokens for perpetual trading protocols. On GMX is on Arbitrum. GNS also, I believe, might be on multiple chains. But yeah, decided to burn it all in the past 2 hours. No explanation given. Over the past day, he's burnt a bunch of Bored Apes, 3 apes, 2 mutant apes, a CryptoPunk. All in all, NFTs worth about 300K, just tossed into the virtual bonfire, right? And the same address started this whole, I honestly don't even know what to call it. Like, what is this guy doing? Like, it makes no sense.
Sacrificing to the gods of crypto.
Yeah, it's a fun one.
Some people just want to watch the world burn, everyone. I don't know what to say. And this individual has put up enough, in assets to buy a small mansion.
And this was really nice to see. Someone actually minted and sent this NFT over to ND4.ETH. Just saying, you know what, try and get some help, take a break, walk away from the computer, right? So whereas most of the people who were messaging or sending him stuff were basically saying, hey, could I have that ape, or begging for the NFTs.
Burn it, send it here instead, right?
Yeah.
That's what they're saying.
So yeah, this was nice to see. But one of the strangest things I've seen in all my time in crypto. I mean,
it'd just be interesting to get an interview with him. I thought, if we could ever get a hold of him or her, or the group of people, it'd be
Maybe
interesting.
they needed to show a tax loss. I don't know. I can't imagine.
Yeah.
I mean, the wallet has nothing left now. It's down to like, it had, I think, 2,300 ETH back in January, and it's down to like 0.2 ETH or something.
Yeah.
It even burnt the ENS domain. So it's no longer nd4.eth. The address formerly known as nd4.eth.
Right.
Oh, yes.
And he spent 10 ETH registering that address last year. And it was registered till 2042, I believe. So
Christ. Well.
Anyway, only in crypto, right?
Sure.
And then in DeFi news, we had MakerDAO that hiked the DAI savings rate to 8% last week in an attempt to boost growth. And no surprise, degens love their yield. So nearly 700 million in deposits have flown in, most of it through Spark protocol, which is a lending protocol based on RVV3, but developed by developers who are also working on MakerDAO. It's kind of in-house. It's their in-house lending protocol, if you want to call it that. And it's basically DAI focused. And it's been understandably, basically it's the only way to directly access the DSR. So if you want to deposit DAI, you'd go through Spark. So it's kind of interlinked. So we've seen the DSR just skyrocket, right? So it's tripled from about 300 odd million to over $1 billion now.
Yeah.
And at the same time, the TVL on Spark has gone from 60 million to, I think, 440.
Yeah. Amazing.
Yep. Again, is it going to be sustainable, or are these deposits just going to move away once the rates drop? It's something that we'll need to see. I mean, in most cases, at least judging by past performance of protocols, money follows the incentives, right? So there's always another farm offering a little bit more, or a lot more if it's a lot less secure. So
greener pastures.
Yeah, we'll see. I mean, Rune justified jacking the rate up, I believe, as like as a temporary growth cost. It was. I do wonder what he thinks of that, because it seemed like he seemed to be portraying capital as not as mercenary as I think of it. So we'll have to see how it goes.
Yeah, I mean, rates have gone up across the board, right? In terms of borrowing, lending, both ways.
Yeah.
So, like you can see from this chart, DAI borrow fees on Aave have been extremely volatile.
Yeah.
Right? Especially over the summer. So I think it's good that we have more options in terms of lending protocols, more protocols offering fixed rate options, right? Which is great.
Yeah.
I'm always in favor of more choice when it comes to DeFi, right? That's what DeFi is all about, like money Legos. Yes, it does lead to potential exploits when you stack all these things. But I mean, we're still building. It's test and prod, work in progress stuff, right? So as long as you are aware of the risks that you're taking when you get into these things, the more the merrier, I say. I don't want to see us become like the traditional banking system where JPM owns everything, or like a couple of protocols, end up with 99% of the TVL. That wouldn't be DeFi for me. Then we're just building the same system again, but on chain.
Yep. Another iteration of centralized finance on chain.
Yep. And speaking of financing, we're seeing a bit of a hangover from the bull market show itself now. So Goldfinch is a debt capital marketplace that lets DeFi users, what you do is you deposit your stablecoins into these pools that are then managed by delegates who lend out that money or use it in various ways. Looks like, so there are some pools that, for example, can hold US treasuries, right? Because that's the thing in demand these days. But it can also do other things. They can be farming DeFi. They can be lending to small businesses in emerging countries, which is what this particular loan was doing. So they lent $5 million back in 2021 to this company called Tugende, which is, what it does is it finances motorcycle taxis in Kenya.
Yeah.
Right. So back then, and even now, I'd say, the narrative is great. You're actually financing something useful, helping the drivers, become entrepreneurs that can own their own machinery rather than, being stuck in that rental cycle for their whole career, etc. But when that company decides to bail out its Ugandan subsidiary using some of those borrowed funds without telling Goldfinch or the people who lent it, you have an issue. Right.
Indeed.
And this is exactly the problem with off-chain assets or like traditional finance in general, right? It's opaque. You have no clue what's happening behind the scenes. And the only clue that you have that something's gone wrong is usually 2 months later, the bank comes out and says, you know what, we're writing down hundreds of millions or whatnot, right? So in this case, the amount was 5 million. And the team is, of course, doing everything they can to kind of, try and recover funds. But at the same time, it is a substantial loss. It's about 4% of the protocol's TVL.
Yeah.
And so it's basically eating into the yield from the last year, right? So everything, all the profit that LPs potentially would have made has been eaten up by this loss.
That's terrible.
Yeah. Yeah, I mean, Goldfinch, it's such an interesting project that it is a shame that this happened. I mean, I was excited to see crypto have a real world effect. So, anyways, on a personal level, I hope they make it back. So,
yeah, I think, like I said, like the narrative is great, the concept is also great, but execution in these things is always
really hard. Yeah.
Like I worked in banking, and even when the borrower was sitting in front of me, I knew this guy's going to default because you could tell. Like there were ways, scams and things are so rife in traditional banking. Like people falsify documents to get loans, falsify revenue. I mean, Trump's being charged with exactly that, right? Inflating the value of his properties, etc., to get loans. So it's at all levels.
Yeah.
I'd say, right? So, crypto, obviously, blockchain finance and the transparency that it offers, that's something that we aspire to change. All these things. But when you take blockchain money and then withdraw it off chain and lend it somewhere, you're back to where you started.
Yeah. You almost need these organizations to come on chain, right? And if you can verify their financials on the blockchain, it's probably a lot easier to make those loans.
Indeed.
Yeah, and that's what some of the talking heads in the space talk about, right? When you talk about tokenizing everything.
Yeah.
Right. That's 10, 15 years down the line if things play out as we hope they do.
Yeah.
At least for our bags. So,
but I mean, even before we get there, we're talking about years and years worth of bureaucratic protocols and procedures that need to be ironed through for them to be able to custody these assets, let alone manage them with regulatory approval and risking them.
Absolutely. I mean, we're still in our little sandbox. The crypto market as a whole, under $1 trillion, right? Like we're worth less than Apple or Tesla as the industry.
Yeah.
Right. So, I mean, the bear market hasn't shaken my faith that crypto is a better way to transact. There's no doubt compared to traditional banking transfers, wire transfers, just sending value to anyone on the planet instantly is in itself an amazing use case. But that's not enough, right? So
Yeah.
I mean, we're already seeing banks kind of adopt or look to adopt DLT technology, right? We had Swift do some research pilot into kind of adopting blockchain tech for their own purposes, but that won't help DeFi,
Right. Yeah.
right? Because that's going to be their own permission version of whatever they pick, tech that they pick, and they say, okay, we're going to use this technology, but not really acknowledge that there's this crypto economy or industry that functions outside, right? And that's not what we should hope for, right? We want everyone to come on to public blockchains, because that's the whole idea of everyone being able to verify and make sure that there's no hanky panky going on.
Yeah, that is the big danger. I had an interview. It was a couple months ago now, but it was someone who had they had employed a DLT technology, and they claimed to be processing like more volume than Ethereum somehow, but just between banks. So yeah, just to your point, I mean, I do think private DLT solutions probably pose a pretty decent risk.
Well, I mean, on an interface that's a permission network, it's no surprise they were able to exceed the transaction volume of Ethereum.
Yeah.
We're talking about something that's scaled out to hundreds of thousands of network participants on the Ethereum level. So,
yeah, fair enough. Yeah, I mean, you're building something for a bank. I mean, they're going to pick up volume, I suppose.
Yeah.
Yep. Forex on chain, that is still something that I don't think anyone's cracked that yet. You can trade like perpetuals based on currency pairs on a few exchanges, but like actual Forex, which is like trillions in volume a day, getting a slice of that market on chain would be, I'd say that alone could float crypto for a long time, just because the whole world needs this service, right? Everyone uses different currencies. It's so hard in some countries to get a hold of dollars or any kind of hard asset that you want.
Yeah.
So we saw that in South America and stuff, right? With and Africa, like they're actually using crypto for some of its, big picture goals that we in the space of kind of it's gone into the background because we're so into the forest that we don't like. We're into the trees, we don't see the forest. So
but you would need all those currencies to get on chain, no? Like you'd need you'd need the yen and the real and all that to be. You'd need like a tether for each of those, right?
You would.
So
it could be
for Forex to work.
Yep. So you'd need an issuer or CBDC potentially.
Yeah. CBDC,
but then if again, that comes back to the permission rails, right? So if countries launch CBDCs and say, "Oh no, you can only use these tokens on our network," that defeats the purpose, right? Because then you still have capital controls and everything else that make it so hard to send money internationally as it is today.
Yeah,
I think the CBDC ethos, I think, goes against the whole idea of what crypto was built to be, with the semblance that like a government could say you can't spend your money on Tuesday, perhaps, or to buy any more of X product. They can fine tune the programmability of the money down to that scale. Whereas you built this programmable money that's supposed to be for the means of distribution, right? And so it's kind of antithetical, if you ask me.
Yeah, absolutely. All right, we're reaching the end of the hour, but so much for running it through quickly today, right, guys?
Sorry, guys.
A lot of news, actually.
Yeah.
We like for the summer, this was an action-packed week, right? So let's quickly run through some of the other major stories from this week.
All right. Well, we've got the Frax founder, Sam Kazemian, who's proposed a collaboration by a Delaware-based FinRes PBC. It's a company doing business as that name. It's been spun up to manage Frax's traditional financial assets in the protocol's V3 strategy, which would handle more off-chain risks. Now, they're talking about taking custody of assets such as small cash deposits, treasury bills, and the like. Currently, the sixth largest stablecoin with a market cap of like around 800 million, Frax is trying to integrate these traditional finance things right into the blockchain. And in so doing, they're tapping FINRA's PBC not to take profit or anything, but just basically to operate at cost and then send all of the yield that it gets from custodying those assets back to the protocol. So I think that this is kind of like what we were talking about earlier, like a lot of the reiteration of financial products in the traditional finance world back on chain is just kind of a way that DeFi is exploring its viability in terms of, how are we going to be able to custody more of these assets? I think it's actually very interesting to see. I was talking to another individual recently about how their protocol is looking at, potentially custodying more real world assets as well. So it's definitely something that has been a trend amongst some of these entities out there in crypto.
Cool.
Yep, I think everyone's jumping on this bandwagon because, like Owen wrote in the story, there's so much money in it. Look at Tether and Circle. Like, they don't care it's a bear market. It's actually good for them. Like, people want stable coins. All right, like, here you go. In the meantime, like, the user gets nothing for holding USDT or USDC, right? And these guys are getting rich off the reserves.
Yeah, there's really no upside for like a trader to custody a stablecoin when they know the volatility of it is null. I mean, unless you have a great deal of confidence and the stablecoin depegs from the dollar, you might, put a long position on it, knowing you're coming back up to $1. That's like whatever percentage it goes down. That's almost a guaranteed trade in your favor. However, this is not like the status quo. As a matter of fact, if it was the status quo, they wouldn't call them stable coins. You know what I mean? So more stablecoins is, however, something that can entice traditional financial players into the marketplace, right? Because if they have a larger basket of stables to look at, it might entice them to say, hey, look, I can expose myself across multiple chains with these coins that are relatively stable and create perhaps yield pairs so that they can start to see some of that happening. But again, there has yet to be any clear regulatory means by which a lot of these companies can expose themselves to these yields. So it's still a very primitive space.
Yep, absolutely. But this is a great move, in my opinion, because even Maker, right, it doesn't pay out what it makes on its treasury to DAI holders, right? It goes to the treasury. But in this case, you might have Frax as a stablecoin having its own native yield, which comes from the reserves, right? Which can then be kind of boosted through the regular incentive method of farming and whatnot on various dexes. So that might actually give Frax a leg up in terms of, boosting market share, etc. Because degens will hold it. They're comfortable with Frax. Frax has held its peg through every, whether it was a market crash or exploit or, pools getting drained. It's been quite solid since its launch, right? And originally, I was a big critic because it was essentially wrapped USDC. But with the introduction of, the Frax LST and, other forms of collateral, I think it's now, I would prefer, honestly, holding Frax to DAI. Because
we know you like yield, so.
Yeah, and because when it comes to the founder's vision, I'm more aligned with Sam than I am with Rune.
Yeah.
Right? I don't know what that guy might do the next day. Like, he can post or do anything, so when it comes to a stablecoin, predictability, to me personally, of course, this is my views, not the Defiance or any, not trying to FUD Maker or do anything of that sort. But personally, for me, when it comes to a stablecoin, I like predictability, right?
Well,
so
the proposal is currently under vote right now. About 1.2 million Frax have been voted for it, 0 against. When I checked, they had about, again, out of 7.2 million quorum, about 1.2 million. So it's trucking on ahead there. And, in a thread, if we wanted to kind of get to the other story that I was going to talk about here, Maple Finance is also expanding its cash management pool to accommodate, American investors that want to expose themselves to 1 month long treasury yields. This is yet another move, kind of like I was speaking to the founder over there, Sidney Powell. He was explaining to me that real world assets are definitely on their radar. And he's aiming to delve deeper into the world of real world assets by introducing a trade financial products within the next 6 to 9 months, as a matter of fact. So, outside of what they're currently exposing people to, this is definitely something to keep an eye on. Maple, pretty significant amount of attention being spent towards custodying these real world assets and then providing a marketplace for them.
Right on. Yeah, I mean, I remember Blake of Goldfinch. He was like, DeFi should be boring, and maybe DeFi is getting a little bit boring, which maybe is good for long-term survival. We'll have to see.
Yeah, I mean, as long as interest rates remain high, it's a no-brainer to bring treasuries on chain.
Yeah,
right? And because people have been so used to, for the last 2 decades, earning nothing on their savings. So when they see 5%, they go crazy. Like I'm seeing that, like even in real life here, like talking about like banks offering CDs at 5.25%, and people are just like, they're salivating over 5%. I'm like, okay, guys, you really missed out on DeFi summer. Like they were still earning 0% back then, while we were farming at like 2,000% APY, right? So, but anyway, so let's end today's stream with an interesting story about one of the legends of the bull market.
Right. The pioneer of 1,000,000% APY, Olympus DAO,
absolutely,
is implementing a feature called cooler loans, which allows, I wrote the story a while back, but which I think allows people to basically collateralize their ohm and borrow 95% against that. And you're borrowing assets from the treasury, and ohm has a pretty massive treasury. I think like second biggest in crypto in terms of just stables, and I think top 10, even including all the assets. So basically there's a way in which this means that ohm holders can wind down the treasury by borrowing against their assets, and then they're unlocking. I'm just looking up now, it's almost 200 million still, so they'll be able to unlock nearly 200 million, which has been locked up there. And in some ways it's like, I mean, I interviewed one primary person there, and he said it's probably going to shrink the treasury, which was kind of ohm's big thing, which, if you remember, you kind of bonded these assets for a discount and you gave them more stable assets, which is why they have all these stable coins, and they gave you ohm. Big saga, which I maybe can't speak to articulately quickly. But so basically, yes, we may be seeing somewhat of a wind down of Olympus DAO, but it's hard to say. And I don't know. It's interesting. It's very. I just don't want to talk about it at the end of the stream, because there's a lot of nuance there. But there's a way where it's like, oh, it's the end of ohm, but also I think they're an interesting project, and it's good not to totally write them off, because they got out of control and everyone copied them. But there was some interesting ideas there, and they weren't like an outright scam. I think they kind of lost control of the horse, so to speak. So
what is the path back into good graces for them?
That's a good question. I could pull up, give me a second.
This chart is just like the bull market in one picture.
Just the market cap.
It really hit 4 billion, huh? Like,
that's a lot of ohm.
The good old days.
I don't think I can speak to it, Jeremy, in like a quick way. I mean, they've talked about a couple mechanisms, but
perhaps it's just this question out there for us to contemplate.
I wrote this like a couple weeks ago, so It's not really
Sure.
loaded. So,
Yeah,
anyway.
I mean, they did build a lot of stuff that is still being used by projects today. The whole bonding mechanism of it did kind of turn liquidity mining on its head, right? Where instead of just buying the token and staking it or whatnot, you were essentially providing liquidity for the token and then giving over those LP tokens to the protocol. So that was like a two-way mechanism that not only bootstrapped the project, but you also like got very deep liquidity, right? So you didn't have these massive up 50%, down 70% kind of candles. Like you would see with new token launches before that, right? So I think refinements to it will continue to come on. I mean, there's an Ohm fork on Base right now. So for people who have never been exposed to it, I mean, you can't you need to experience it once in DeFi. I think just the thrill of seeing that number go up. As long as get out before everyone else, or at least the big whales, you're okay.
Yeah, when the chart's vertical, it's a good time to sell.
Right on.
So anyway, thank you everyone for joining us today. I think we had a great mix of stories, some fun ones, some not so good in terms of writing off loans, but overall a good week for crypto. We have Base live, and we'll have to see how Onchain Summer plays out. So thanks again for joining us, and we'll be back same time next week. See you then.
All right, y'all.
Take care, everybody.
Thanks for listening.